Coming to you from the heart of Texas, this is Accounting Matters, the go-to podcast for accounting and finance professionals from your friends at Embark. Thanks for joining us, y'all. I'm Nicole Harger, Embark's National Quality Managing Director. And as always, I'm joined by my co-host, Adam Olson, Embark's Accounting Advisory Practice Leader. Adam, how's it going?
Good. Just recovering,
yeah.
I would say, after a long 3 days that we just spent in our nation's capital at the annual AICPA and AICPA Conference, covering current developments of the SEC and PCAOB. I'm sure you can agree, a lot of good information, a lot of lively discussions that were had there, and excited that we get to unpack some of that today.
Yeah, so that's our plan today, to just kind of recap the conference. And actually, you and I were sitting in the conference listening to all the panel discussions, but our fellow embarkers that were out working the booth actually were able to meet some of our podcast listeners. So that's very exciting.
It is.
Disappointing we didn't get to meet you guys, but okay, so let's jump right in.
Sure. So, I think the conference kicked off day one. We had the SEC's chief accountant, Paul Munter, really kind of setting the tone for, I would say for the next 3 days, really kind of the overarching themes of that we heard throughout a lot of different panels there. And so he really, and he tends to do this with a lot of his speeches, is just reiterated the profession's commitment, so the accounting professions, to public interest and how risk assessment really is the bedrock of financial reporting. Everything from start to finish really hinges on understanding and managing risks of a reporting entity.
Yep. So, risk assessment is crucial, no doubt. So what were some of the key areas discussed by the Office of the Chief Accountant?
Yeah. So with Paul's kind of panel discussion, we also had members of OCA there. And so they really kind of covered three main buckets in their overview to the audience when they presented. So they really harped on high quality accounting standards, the application of those high quality accounting standards, and then obviously the need for quality independent audits. Really, as part of that discussion, Munter also kind of highlighted some of the initiatives by the FASB, who was also in attendance. And he brought up things like the recently issued improvements to segment reporting that just came out, not too long before the conference actually started. The improvements to income tax disclosures that we've covered on some of our sister podcasts earlier in this year, and really if you think about just those two standards in isolation, the goal behind each of those standards was just to provide, it's more transparency, right? So just understanding that what investors need today, is different than what they maybe needed 10 years ago. And we have to keep up with the evolving needs of our investors.
Yep. Transparency is key, especially in a rapidly changing environment. I think, the other word that would kind of go along with that is clarity, which you saw all over. I think that was maybe the theme of the conference. So, and transparency was really the theme from last year's conference. So I know we also heard at length some discussions on fair value measurement, particularly in the context of crypto assets.
Yep, they did. And so OCA did spend a bit of time talking about fair value measurements. So, accounting guidance in ASC 820. Really just reiterating, its significance, and especially since there is an ASU on crypto assets that's expected to be issued shortly here
this month, right?
And so, one thing that they kind of alluded to, and crypto was a big topic of last year's conference, right? I think there were several sessions or at least conversations around it. And so it's not really a surprise that it continues to be an ongoing conversation. And I think what they really tried to highlight when they were speaking to crypto this year is that when you think about the context of fair value measurements, the real challenge exists in how do you identify the principal market for the rapidly evolving crypto asset market.
The crypto landscape is indeed dynamic, and I know we will follow that closely as the new ASU comes to finalization. Sounds like this month. I know that's kind of always been projected.
Yep.
At the conference, they didn't allude to anything different, so we will wait for that to come. But moving on, so there are a lot of audit firms that attend the conference, and so therefore there was a lot of chatter around those firms. Specifically, Mr. Munter and his team emphasized the importance of an audit firm's culture, and he was very quick to note that a strong culture does ensure that the audit engagement team does maintain professional skepticism, which is a critical element in high quality audits.
Yeah. And just adding on to that. So Anita Doubt also highlighted that the role of audit firms leadership really is to promote that professional skepticism.
Yep.
So a lot of onus on audit firms. Obviously, Embark is not an audit firm, but considering it is a PCAOB as well focused conference, there is a lot of discussion around the performance of audit firms. And again, she just helped reiterate the importance of direct communication between a company's audit committee and their auditor, and making sure that there's a strong culture of trust and accountability between those groups.
Yep. And so risk assessment wasn't just a one-time topic. I think we heard about it almost every day throughout the conference. Mr. Munter highlighted its continuous importance in a rapidly evolving environment. So factors like interest rates, supply chain disruptions, and geopolitical issues need constant evaluation for accurate, complete, and high-quality financial reporting.
Yeah, and I think he kind of went back to his analogy that he always uses, or at least I've heard it, I don't know, the last several years. And I think it's a good one here. It's really about like accountants are, if you think about it, in the communications business, right? Because we are preparing financial statements that are used by users of those financial statements. And so it's our responsibility to make sure we're communicating to those stakeholders, like the information that's important that they need to know. And this really kind of led to him talking about like disclosures. Again, they're not just, check the box, compliance type exercise, but really companies need to be thinking about transparent communication and those disclosures, providing context around like risks or uncertainties that a company may face, and just making sure that they're being kind of robust and giving information that investors are needing.
Yep. Clarity, right?
Yes, clarity again.
Communication is indeed key. Did they touch on any specific challenges or developments in government and oversight? Yeah,
they did. So they talked about challenges kind of on, a lot of different levels, like both globally, nationally, and even at the local levels, talking about putting financial reporting and internal controls to the test. One thing that did come up, I think there was a session kind of talking about, audit committees themselves, is like, how can audit committees really, there's so many things that they have to kind of keep up with and deal with. And how can they really effectively navigate just all these different challenges in an evolving landscape of corporate responsibility and governance, and really fulfill their role as, members of that audit committee.
Yep. And so, of course, the hot topic of ESG reporting came up. With new and anticipated regulatory mandates, companies are gearing up for increased disclosure requirements. So it's not just about compliance, but it's about demonstrating also a commitment to sustainability.
Yeah. And so I think a lot of people there were hoping, like, I think same as last year, that the SEC's final climate rule would be released, but I think we were left with more anticipation than anything
they didn't
else.
really talk about timeline at all. And I was kind of joking I forget who was sitting next to me, like, is there a Reddit thread, right? Like, somebody's got to know when it's coming.
There was a little discussion, just not necessarily like a discrete timeline, but more along the lines of like, it's not a matter of if it's coming, but like when. So I think there's at least the consensus that something is coming. But I will say, like, and I think a lot of, other people that have been followed this pretty closely, myself included, like, as the conference concluded, there was actually an update to the regulatory agenda of the SEC, their rulemaking regulatory agenda. And so in that re-release of kind of their priorities, they actually did update the expected timing of the release of the climate rule. So now it has been pushed to April of 2024. So I think in their minds, we're already at the end of the year right here, right? A lot of registrants are trying to now just get through year-end reporting and filings and audits and things like that. So I think as that next kind of wave of, responsibilities for accounting and finance and teams gets, complete, then we might see a rule. So that really puts us basically at like the 2-year mark since the original proposal came out. So, time will tell, I guess.
Yeah.
But moving on from that, I guess we also heard from the SEC's Division of Corporate Finance, or CorpFin. And again, they shared their insights into their priorities, disclosure trends they're seeing, and expectations. I do think it's, interesting that they discuss the anticipated response to additional measures of segment profit and loss. So, that new ASU that just came out.
Yep.
And so there was a lot of discussion just around, I think, even that the transparency that new ASU brought out. So ASU 2023-07 that the FASB put forth.
Yeah, segment reporting is always a complex area. Can you shed some light on any recurring issues or common themes from SEC comment letters? I know they touched on that during the conference.
Yeah. So CorpFin always kind of does a SEC comment letter trends, kind of what they're seeing. And so I will say that MD&A was kind of the hot topic as far as like kind of top, issue or whatever that was taking center stage for where regulatory comments kind of arose. So Kevin Woody, who's the SEC's accounting branch chief, he emphasized the importance of critical accounting estimates as well, and disclosures around them, and how it merely shouldn't just be a repeat of significant accounting policy disclosures. So really trying to make sure that, you're doing more than just kind of like boilerplate, kind of generic type stuff. You're providing robust, informative, meaningful disclosures to the users and investors that that want to use those financial statements.
Yep. Okay, so we can't leave out non-GAAP financial measures. So CorpFin staff did highlight persistent errors, urging companies to properly identify recurring expenses and avoid misleading presentations.
Yes, and we've done a podcast on non-GAAP measures, so definitely check that one out for just more information on kind of common issues and things that arise as it relates to non-GAAP measures. Yeah, I would just say a couple other areas that CorpFin highlighted. So they talked about just challenges around inventory disclosures, and they also talked about just the need for meaningful market rate exposure risk disclosures. And again, here, just kind of going back to that boilerplate, is just make sure that you're providing more context and it's not just kind of generic, run of the mill,
applies to everyone.
Yeah, right. Like let's put some meat behind some of this stuff so people can truly understand.
Yeah. Yep. And that was a theme we also heard at the conference from prior year as well. And I wanted to pivot to the FASB update we heard at the conference next. As we talked about earlier, one of the key moments from the conference happened on Monday when Mr. Munter emphasized the importance of achievable standard setting for all stakeholders.
Yes. And then on Tuesday is when we actually heard from the FASB in their presentation. So FASB Chair Richard Jones, he kind of took the stage and stressed the significance of feedback from their recent agenda consultation. He had done the same thing, at last year's conference. So just kind of a formulaic way of how they give an overview of what they're up to. But he also highlighted the need for accounting standards, again, to be useful and relevant to investors, but also operable for preparers, right? It can't be so burdensome that, preparers are not able to actually operationally, embed those standards into their day-to-day. And then also just clear for auditors, so auditors understand kind of like what they should be evaluating when they're going through the audit.
Yep. So Mr. Jones specifically mentioned a recurring theme from investors, disaggregation. Mm-hmm. So it seems to be that the FASB is responding to this call. And once they conclude their ongoing projects, we can expect more narrowly scoped projects. Mr. Jones did hint at another agenda consultation in 2024.
Yeah. And so just maybe going back to the topic of disaggregation, we also heard from FASB Technical Director Hillary Sallow, who's actually going to be a new FASB board member next year. And she did highlight kind of 3 projects that were designed to provide more detailed information for investors. So really just kind of showing what the FASB has been doing to increase transparency, because they've set out this mission that they're going to provide transparency and disaggregation. And so she highlighted some of those projects that they've been taking on.
Yep. And so the first project was the recently issued ASU 2023-07 that we previously mentioned a little bit, which focuses on improvements to segment reporting. Mm-hmm. It does require public entities to disclose significant expense categories in each reportable segment, offering investors a little bit more of a detailed look into the company's financial landscape.
Yeah, I guess I would also add to that is that, they talked about that ASU's effective date is actually just right around the corner. So fiscal years beginning after December 15th, 2023.
Now.
Basically now, right? So most registrants need to be prepared, but they did highlight that registrants that are single reportable segment entities may face challenges when they're trying to comply with ASC 280 for the first time, and so that's just something that those preparers need to be aware of.
Yep. And so another specific project in the works involves the disclosure of a company's global tax obligations. The FASB issued an exposure draft back in March of this year, and they do aim to finalize the standard by the end of this month. And this really could provide investors with a detailed view of a company's tax-related activities through enhanced disclosures.
Yeah, and kind of similarly to the segments, the proposed amendments would require public business entities to disaggregate specific expense categories within the income statement. And the FASB is actively considering comments received and will continue, discussions at a public roundtable meeting that's also set for later in December.
So shifting gears back to our very fascinating area of crypto assets, the FASB Deputy Technical Director highlighted the proposed ASU that we briefly touched on crypto assets. And as we mentioned, this project is expected to wrap up by the end of this month.
Yeah, and just from the FASB's point of view, they just explained a little bit around the ASUs, whereas the SEC kind of just talked about some of the standard setting that was in place. But that final ASU will require companies holding crypto assets, like Bitcoin, et cetera, to measure them at fair value, and with those changes recorded to the income statement. And the scope of the project is limited to specific criteria. So certain types of crypto assets like non-fungible tokens that, they highlighted would be excluded from the scope, or anything else that maybe, meets the definition of a financial asset would be subject to other GAAP.
Yep. And so it seems the accounting profession is evolving in response to emerging trends. The Emerging Issues Task Force's role is changing, discontinuing its historical role as a standard setter. Instead, it will focus on advising the board on issues to consider adding to the FASB's agenda.
Yeah, it's interesting that they decided to kind of repurpose the mission of the EITF. So be curious to kind of see how that works going forward.
Yep.
But switching gears, one thing they do every year at the conference is kind of talking about consultation trends. Specifically, what are the large kind of global accounting firms hearing or seeing, like what issues tend to keep coming up, where they're having clients needing to consult with their national offices. So maybe just do kind of a little unpacking of some of the top trends that they highlighted. So the first one that they talked about was paying vendors with equity. So instead of using cash, just seeing kind of equity instruments being used more commonly. That was kind of their first trend that they walked through.
Yeah, and so specifically there, Angela Ferguson from PwC noted really two reasons behind this trend. The first is companies wanting to conserve cash, and vendors looking to make strategic investments. So it is a dynamic shift with implications for both customers and vendors.
Yeah, and then trend two that they highlighted centered around business combinations, which I think that one, probably comes up every year. So, and they did obviously note, and it's probably to no one's surprise, deal volumes are down, right? We've all talked about that on other, podcasts at Accounting Matters and things of the nature. But, deal volumes are down. We're down in late 2022 and throughout 2023. But they did also highlight that a lot of the structures for those deals are becoming more complex, and that is becoming more and more common, those complex structures, which then inevitably leads to more accounting challenges and just considerations that preparers have to think through. So they spent a little bit of time kind of talking through creative contingent consideration arrangements that they're seeing more and more, talking about impacts of certain VIE guidance that people may overlook that they potentially need to consider to make sure that they're actually understanding who's acquiring who.
Yep.
So just a number of different issues around business combination. So another hot topic, I guess.
Yep. So trend 3, royalty monetization, is gaining traction as a mechanism for generating cash, especially with intellectual property. The panel delved into the accounting complexities associated with monetizing future royalties as well.
Yeah, and then the fourth trend they hit on and we're only doing 5, just in case someone's like, how many more are we doing here? It's centered in on embedded leases, which I know we've talked about on this podcast as well. Particularly in service contracts that involve specific assets, just the need and reminders to assess for any potential leases. And so they obviously walk through just what is the definition of a lease, what kind of factors do you need to consider when evaluating whether or not a lease exists. But again, that's just something that they're seeing come up more and more, and specifically in service type contracts.
And lastly, trend 5, virtual power purchase agreements, or VPPAs, which was a popular transaction in 2023 and one that is expected to continue to grow as the increased focus on sustainability becomes one of the top issues for many companies. These arrangements do allow purchasers to meet clean energy goals without altering their power structure.
Yeah, and I know we've talked briefly about VPPAs in our episode on carbon credits, so definitely check that out as well. Speaking of clean energy and sustainability goals, there was a session talking about ESG. Even though we didn't have a final rule, they still had a panel discussion around the future of ESG reporting. Like I said at the beginning of the conference, former SEC Commissioner Elad Rosman highlighted that the SEC's climate rule is inevitable. It's just kind of a matter of when it's going to happen. So April next year, in case you missed that earlier. But then on day 3, we did have our ESG panels. So Wendy Stevens from Mazars moderated a panel just kind of talking about the current state and what companies are thinking about, and even assurance providers are thinking about, as we're starting to see kind of the walls closing in on the mandated regulatory reporting.
Yeah, and so as part of that discussion, the panel did talk about the dominance of the California laws as well as international requirements. And I guess specifically as it relates to the new 2 bills, the Climate Corporate Data Accountability Act and the Climate Related Financial Risk Act. Those were highlighted. They provide an overview of those 2 new rules, and then also the impact on disclosure requirements as well as financial risk reporting.
Yeah, it was interesting that they, on the California bills, they said those weren't necessarily investor driven. Like the SEC's climate bill is clearly the genesis for why the SEC wants to put that forth is because investors want to use that information. Yep. But they also did highlight, even though the California bills were not designed to address investor needs, it's obviously it's a point of view that the state of California has for sustainability and accountability, but it'll be inevitable that investors will still use that information, right? Because it'll be available to them. Right. So it was just an interesting kind of anecdote that they added there. But then I would say they also kind of then talked about the other major climate reporting bills that are in play. So there was a lot of discussion around the CSRD in the EU, and then obviously the ISSB standards coming into focus, and just talking about we're starting to see more globally adoption of the ISSB in some form or fashion. And then obviously companies that are subject to CSRD really trying to start evaluating scoping, impact, and materiality exercises just to start getting ready, because the time horizon for those isn't that far off.
Yep. And so speaking of ESG, the lack of convergence between the different standards was laminated during the conference. There is a need for companies to navigate this complex environment, considering regulations like CSRD and ISSB standards.
Yeah. And then I'll say the panelists also emphasized, just the importance of decision useful sustainability information. So Sandra Peters from the CFA Institute highlighted characteristics that would actually make such information more valuable. Forward-looking, consistently reported, needs to be connected to financial impacts, and then probably what all auditors love to hear is information that's subject to well-designed controls and processes, just to ensure the completeness, the accuracy, and the relevance and reliability of that information.
Yep. And so finally, the podcast wouldn't be complete without a glimpse into our future. The future. One of the last panels of the conference did explore the potential impact of Gen AI on financial reporting. The consensus was that stakeholders are well positioned to leverage Gen AI for increased productivity, data accessibility, anomaly detection, and real-time insights.
Yeah, it's always interesting to see how technology is really starting to shape the accounting profession. And obviously had a lot of thought leaders there speak into that. And I think, as Gen AI becomes more prevalent, it's definitely going to raise the floor for accountants, allowing them to, I think, do more interesting things, hopefully. So like synthesizing results and a lot more analysis rather than kind of just what people think maybe accountants do, like the kind of boring number crunching type stuff. Yep. AI will allow for more, interesting work, I guess.
Yep. And so on that note, I think we've covered a lot from the 2023 AICPA and CIMA SEC and PCAOB Current Developments Conference. There's a lot to take away. Look forward to some of the things that they talked about coming into fruition next year, and then as well as we will plan to be there next year as well, right?
Yeah,
hopefully. So on that note, we've covered a lot from the 2023 AICPA and CIMA SEC and PCAOB Current Developments Conference. There was a lot to take away. I look forward to kind of seeing some of these things come to fruition in this next year, and then hopefully we will be there again next year.
We'll be following it all as it unfolds, right, on Accounting Matters. So,
all right. So until next time, thanks for tuning in to another episode of Accounting Matters.